Today, Bitcoin climbs back to $61,000 after a weaker than expected jobs report. Block and Coinbase post earnings beats bolstered by Bitcoin's first quarter rally. And Crypto World takes a look at how fashion brand MNTGE is betting its brand on the promise of Web3 and NFTs. Welcome to CNBC's Crypto World. I'm Jordan Smith. Cryptocurrencies are headed higher after a weak jobs report for April has raised hopes that the Fed could start cutting interest rates soon. By noon Eastern, Bitcoin climbed back above $61,000, while Ether crossed back above $3,000. Uniswap also in the green, rising to $745. Today's gains helped bring Bitcoin and Ether back from their weekly lows, but it wasn't enough to put them in positive territory. Bitcoin's down 3.2% in the past 7 days compared to 1.9% for Ether. Okay, let's talk about the top stories. Coinbase and Block both releasing earnings Thursday night and both reporting better than expected results on the back of Bitcoin's Q1 rally. Let's start with Coinbase, which reported $1.64 billion in revenue in the first quarter compared to $1.34 billion expected. Adjusted EPS came in at $2.15 compared to estimates of $1.09. Coinbase reported $935 million in consumer transaction revenue, up well over 100% from a year prior. Now, part of the profit in the quarter included a $650 million mark-to-market gain on crypto assets held for investment, part of the company adopting updated accounting standards. Now, shares of Coinbase were down 3.7% by midday today, but yesterday, after that earnings release, the company's CFO, Alicia Haas, joined Closing Bell Overtime to talk about how the launch of Bitcoin ETFs in the quarter gave the crypto exchange a boost.
Well, ETFs really unlocked a flywheel of engagement across the Coinbase Prime platform. We've said that ETFs would be a benefit to Coinbase and the ecosystem, and that really played out in Q1. What we saw is just net inflows across the board. So yes, we saw $11 billion of inflows into ETFs, but we also saw an increase in consumer trading on our platform, an increase in institutional trading. And as I said, on the institutional side, this flywheel, we saw people engaging in financing, we saw people engaging in trading, we saw people engaging in custody. And as a result, we had 40% of our institutional clients engaged in 3 or more products on the Prime platform in Q1. So really it was a lift across the board and benefited the entire ecosystem.
Now, payments firm Block also reported earnings that beat analyst expectations yesterday. The company reported $5.96 billion in revenue compared to $5.82 billion expected and quadrupled its net income from a year earlier. In a note to shareholders, Jack Dorsey explained why he spends so much time on Bitcoin, and he said that Block spends less than 3% of its resources on Bitcoin-related projects, but will be investing 10% of its gross profit from Bitcoin products into Bitcoin purchases. According to Dorsey, the $220 million the company invested in Bitcoin has grown 160% to $573 million. Shares of Block were up 0.8% by midday. Next, Tether announced a partnership with blockchain analytics firm Chainalysis to help monitor secondary market trading. The collaboration will include sanctions monitoring to identify addresses of sanctioned entities, as well as detection of illicit transfers. These compliance measures come as Tether, the largest stablecoin by market cap, has faced growing scrutiny over its tokens being used in sanctioned industries like Venezuelan oil, as reported by Reuters. Just this past Sunday, Senators Elizabeth Warren and Roger Marshall sent a letter to various government agencies to express concerns around crypto's use in evading U.S. sanctions, citing a Wall Street Journal report mentioning Tether being, quote, indispensable to Vladimir Putin's war machine. When Crypto World asked Tether about the report of its use in sanctioned Venezuelan energy exports, the stablecoin issuer said it respects OFAC sanctions and is committed to working to ensure sanction addresses are frozen promptly. All right, for our main story, the clothing brand MNTGE has helped move vintage garments into the world of Web3. Crypto World's Talia Kaplan gave us an inside look at the company and how it makes use of blockchain technology.
So this never came out.
It was an idea that came about when the COVID pandemic was raging around the world. Brennan Russo and Nick Adler, who knew each other from working on projects with rapper Snoop Dogg, met Sean Witherspoon when they visited one of his vintage stores. They were inspired by the expertly sourced pieces, and so the three teamed up to create the fashion brand MNTGE, a vintage clothing brand which integrates blockchain technology into garments. The brand launched in 2022, the same year Web3 development reached an all-time high.
The goal of the brand is, number one, we want to make something that people want to wear and are proud to wear. We're also early adopters and we love technology, and we think that fashion can be disrupted greatly by technology, and we want to be both, experimenters but thought leaders when it comes to mixing fashion and tech.
MNTGE is experimenting with that mixture of fashion and tech by using blockchain and incorporating non-fungible tokens. But that comes at a time when NFT global sales volume is more than 90% lower than its all-time high back in 2022.
It was very important for us to integrate Web3 and blockchain technology into our brand because when you're thinking about vintage items, you're thinking about authenticity and you're thinking about special stories like the provenance of that item, the rarity of that item, traits around that item. And when we looked at what blockchain could do as a technology, we realized that it had a lot of solutions for that.
When you're going to go out and spend $200, $300, $400 on a vintage t-shirt, the first thing you need to know is it real? That's a problem. And through having a token in which we inspect each individual item that comes through and that we hand select, that token on the blockchain, when you tap your phone to it, that's the link between the two. So that is a really firm approval of, yes, this is a real product. We as a company have seen it, we've inspected it, and we have looked at the history of where we've got it from, and yes, this is a real Snoop Dogg t-shirt, for instance.
So how exactly does the team at MNTGE integrate blockchain technology with physical items?
We wanted to be able to, archive these t-shirts. We wanted to be able to curate these in collections, but we also wanted to add that tech and Web3 side to it. So we were toying around with tons of ways to add our chip, to add our tag in a way that wouldn't compromise the value of the t-shirt, wouldn't compromise, the overall style of it, but it would still have that tech factor. And we came up with adding the tags down here.
The first and foremost thing that we've done is to integrate NFC chips into our products. That's through both patches, through tags behind the neck, through a hang tag that we're really excited to launch.
Super simple, no logins. You tap your phone up against there, you tap the link that opens up the web browser, and then it pulls up the verified token. And so really blockchain is kind of the backbone.
A lot of what's really important to us right now is storytelling. So we want you to know who designed the item, what number the item is in the collection, what potential rips and tears, and things that we call traits live with the item. Potentially who wore the item. Was it worn by some celebrity?
Sonic Youth, again,
Brennan breaks down the storytelling aspect of the blockchain integration.
If you tap your phone, you'll unlock a digital experience. It shows you what the T is, and then if you click down here into product information, it'll show you original size, year it was from, if they're distressing.
In April 2023, MNTGE released a collection known as the Fruits and Veggies Jeans Drop, showcasing vintage jeans embedded with NFC tags linked to NFTs. It was the brand's first physical apparel drop after first debuting digital apparel.
This was a project that I did really based on old Levi's silhouettes, and so we sourced vintage Levi's anywhere from 10 years old to 40 plus years old, and we did the fruit and veggie embroidery all over them. These killed it for us, and these are fully chipped by MNTGE also, so you can go ahead and tap there. It'll bring you to our digital experience, and it'll also give you a digital collectible to claim as well.
More recently, MNTGE released its Patchwork collection, comprised of a series of NFT patches paired with a physical counterpart. The brand worked with 11 artists from different genres, including Web3 and tattoo artists, to design the patches.
And that patch was released initially as a digital patch, and it was purchased via the blockchain, via Ethereum. And once they owned and purchased that patch, they could redeem it for a physical patch.
To do that, customers then went on the company's website and connected their wallets.
The program read that they owned the digital item, they put in their address, and we sent them the patch. We attached an NFC chip to that patch, so when they received that patch, all they had to do was tap that patch with their phone, and they then received a digital receipt of that patch. It was really a two-step process. This is an example of how a chipped patch and a denim jacket combine to make essentially a new and multi-connected product.
Nick says the brand's Patchwork collection was wildly successful.
The interesting thing about the brand we created is that we have a few different paths to revenue. One is through selling physical items and one is through selling digital items. And to be completely honest, there's incredible margins in digital items. So we were able to launch our patches and sell a high quantity of them, and that ultimately was purely as a digital item. So as a business model, there's a lot of opportunity there. Where do we see the future is we see a future in, obviously there's the authentication we talked about, but we like these patches as opening up consumer loyalty programs. We like that if you own these patches, we can update these digital patches. Maybe you walk into a store, you tap on your phone, and that store gives you a rebate or access to a new product or a special seating or access to special seating at a show. So we see a ton of future business opportunity, but based on initial success, it's been through the roof.
And now Mintage has been collaborating with some notable brands, including Wrangler, joining forces in February to create a collection of vintage items ingrained with NFC chips.
We collected a bunch of old artwork from some of their old patches, and we recreated it. And then what we did is on a couple of Western shirts and denim jackets, we sewed on the patches, and then we sold those to customers and consumers in Paris.
And the Mintage co-founders say expect more collaborations with iconic brands and traditional fashion houses in the future, even though the current state of Web3 looks different compared to when Mintage launched.
My outlook is that fashion is going to be the leading use case of Web3. I was recently in Europe, spent a lot of time in Paris, where I think you're seeing a lot of leaders thinking about this, more so than I'm seeing domestically in the United States. And you're seeing a ton of the fashion houses, whether they're hiring heads of innovation or heads of blockchain, are thinking about this on a daily basis. So I think fashion is going to be the leading use case, and I think that it's going to grow into every facet and every industry that we know, and I think it'll be pervasive. I don't even think we're going to define it as Web3 or NFTs or blockchain. I think it's going to be everyday technology that's going to be integrated into our products.
All right, that's all for Crypto World this week. We'll be back again on Monday, and we'll see you then.